Are you a Facebook fan or a Twitter fan?
I wouldn't say I'm a fan, but I use Twitter for work and Facebook for family.
Okay, good. It's good to know. And what about football or rugby?
I probably keener on football.
Okay.
I like good football, so I'll watch match of the day and see the highlights rather than going to games and getting all the boring bits in between the goals.
Yes, I know what you mean. What about, so would you rather haggis or falafels? How do you say that word? Falafels.
I tend to eat vegetarian food, so the answer would be falafel. But if I was doing a taste test, probably haggis tastes better.
And of course they do make vegetarian haggis.
Yes, they do.
So I have had that before. And finally, do you prefer whiskey or gin?
Oh, whiskey, definitely. Malt whiskey, not blended whiskey.
And do you have a favourite malt whiskey?
And I like Dalwhinnie. Yes, I like pale malts, not too much sherry cask.
Okay, that's good. So Mary Jane Brouwers has kindly agreed to speak to us tonight, and I've known you, Mary Jane, for a number of years now, and I always find Mary Jane very supportive and generous with her advice, and so I was very happy that you agreed to guest for us tonight. But I know that your experience is so extensive, I could never do justice to a proper introduction. So could you tell
introduce myself. I studied archaeology at university, so that's my degree is archaeology. But I got a job on a graduate training scheme with Conoco, an oil business in Aberdeen. And that was me starting on the Conoco encouraged the graduate trainees to do a professional qualification, and I chose to do a management accountancy qualification. So that's me moving in a financial direction, having started off as an archaeologist. And I worked in industry for 12 years in different sectors, in Aberdeen, in London, and in Brussels. And then, having done those 12 years, I wanted to come back to Scotland, and that took me to Bank of Scotland just over 20 years ago, and that's when I started working in equity investments. So at Bank of Scotland, equity investments covered a whole range. This was investing off the bank's balance sheet, everything from startups through to buying listed stock, so AIM listed bank customers. So it was a big range of investment opportunities, and it's only after I left Bank of Scotland that I started focusing on SMEs and earlier stage, and that has been primarily through the 6 years that I worked at Archangel, so that was angel investing, but I've also worked for the Scottish Investment Bank for a couple of years, so I've seen their perspective on the market, and currently I'm working for SIS Ventures. Social Investment Scotland has FCA approval to raise a venture fund. So this is me starting in impact investing, both in Scotland with SIS Ventures, but also with the African Lakes Company, which is a Scottish business with an investment pot supporting or investing in growth stage businesses in Malawi. So that's my range of investment experience.
So over those years, how many companies or startups have you witnessed getting investment deals?
Well, I think in some ways, I've seen probably hundreds of business plans, which is relevant, and I've probably spoken to hundreds of businesses, and I've certainly attended hundreds of board meetings of early stage companies. Now, how many businesses have I actually seen raise money? That would be from a portfolio management perspective. Working at Archangels for 6 years, I had a portfolio of 12 companies, and most of them raised money every other year. So there you go. That's 12 times 3 times, yeah. So
Quite a lot.
about 40 or 50.
Okay,
yeah.
good. Because I guess I'm interested from your experience and your perspective in the patterns that you've seen over those years. So I guess success patterns. And I guess if there's anything that would be useful for entrepreneurs who are thinking of building a successful company and getting investment, then obviously these patterns might be interesting.
Yeah, I'm not sure whether it's patterns as such, but keeping the investor perspective, one of the things we learnt pretty quickly, say at Bank of Scotland, was it was the same effort to make a 50,000 investment in a really small startup as it was to put 2.5 million into an established company. So it was the same effort, and you know what? It's a lot less risky to invest 2.5 million in an established company than it is to put 50,000 into a startup. So that, I think, understanding that investors are people and that they have different agendas depending on the nature of the investment that they're doing is really important, because each scenario will have a different success pattern. Sure. And even if you're looking at companies at different stages, so if we stick with startup businesses now, you talked a little bit in your introduction about the different kinds of focuses that you might have. And there are investors who are only interested in software, for example, because you know what, there isn't much capital requirement. There are a few pizzas and beers to pay for, but apart from that, it's relatively low intensity from an investment perspective. And then people who have products, there's a big working capital requirement, a lot tied up. If you have to build a manufacturing plant, for most investors that's a nightmare. They just wouldn't want to have their investment going into that sort of an opportunity. Depends on the investor. There are investors who love products. They believe that their expertise is in product design, so they only look for businesses with products because they think they will be able to add their own expertise that will make all the difference. So really, not so much at that level, not so much patterns, because it depends on the nature of the business and the nature of the investor. Very much from a personal perspective, well, if I had to give one sentence, it's you have to be solving a problem that people are prepared to pay to have solved. And I see lots of businesses that have identified a problem and they have the solution, but unfortunately nobody cares. You know, that is a problem, and yes, you have the solution, but there are alternatives, and people don't feel motivated to buy your solution, because you know what, there's something else that's a lot cheaper or different that means that the problem that you've identified is not something that has value to them.
So obviously an entrepreneur needs to think about the size of the market and the fact that there's a real need that they can charge people a lifetime value, or certainly factor in the lifetime value of a customer into your business plan. And I guess for entrepreneurs who fail to do that or don't think about doing that, then that is a characteristic that will make it difficult to raise investment.
So if you've identified a problem that you've solved and people will pay to solve that problem, well, you know what, if only one person's got that problem, which is your market point, then that's not a viable proposition. You need to be sure that there are lots of people who want to pay to have that problem solved. And I think that certainly when you're at the startup stage, the business plan is basically a fairy tale. And most investors accept that, don't they, Michiel? Most investors accept that, but the majority of angel investors want to be able to understand what you're talking about. So if you can produce a convincing story, then the investors will listen to you. If they can relate to what you're talking about, then they will engage and find out more. And so I think that not necessarily coming up with massive addressable market numbers, but really keeping it quite simple. This is the problem. This is why people will pay to have it solved, and this is how we're going to solve it. And then the important thing, and this is how we're going to sell, because that's often missed out in business plans, how you actually get your product to your customers.
Okay, so I thought you were going to talk about the exit for the company there, but you mean actually selling?
No, the product.
Yeah. Okay, great. And so, do you recall a really good example of someone who did that you can share with us?
Yeah, well, I think again it comes back to the individual investor's perspective. Right now, as you all know, SaaS businesses are very fashionable, and in a sense, there is an element of fashion in this. And if you're old enough to remember the dot-com boom, a company bought a name, added .com to their name, and they had an instant valuation of $2 million. There was absolutely nothing there, but because they were at .com, it was meaningful and investable. And to a degree, there's a little bit of that in the SaaS market. It's quite scary seeing some of the pricing that's coming through now. But I think there are some good metrics in SaaS businesses. And the ones that I've seen that I would say are good are the ones that understand where the value comes from, how they create value, and that it's arithmetic in many ways, and it goes back to the cost of customer acquisition, the rate of growth that you achieve, and the stickiness of your product. So they're measurable and demonstrable. So anybody who can go to an investor with a story that stacks up is in a reasonable position and may be successful in securing investment. But I think it's seeing things from the investor's perspective and not getting frustrated with them when they don't see how amazing your opportunity is from the very beginning. You have to be patient with them.
And of course it helps if you've found an investor who is a good fit with you, so you fit in their investor thesis.
Yeah, I think you put up that image of the pub.
Uh-huh.
And you were talking about that in the context of the founder team. But in many ways, most of the investors want to feel that they could be standing at that bar with you as well. They're looking for, they're the investor and you're the investee, so there is a formal relationship there. But they want to have an open line of communication. They want to be comfortable that the investee company is listening and prepared to change, and that they will cooperate with the investor so the investor can provide the information that's needed to their group. So everybody's happy, and I think things will get difficult in the same way as again, you were saying earlier that you may fall out with founders, investors may investee companies may fall out of favor with the investors, but this is very much something that you need to work on when you're developing the relationship with your potential investor, because you will be spending a lot of time with the investor, so you need to be happy that you can put up with them and spend time with them. but also you might need them. If things don't go according to plan, or if things go really well, you want your investor to be supportive. And unless you've built a constructive relationship with them, then there will be issues very quickly. So when you are pitching, you're really interviewing your potential investor. And not to lose sight of that, you might feel that they're in a far stronger position than you are, but your business idea could be the next best thing, next big thing for that investor. So really you're interviewing them.
And then I totally appreciate you saying that, and it's something that not many people talk about. But of course, there are different investors out there. Investors who just want, the tax break through one of the schemes that are available.
Yeah, the EIS, SEIS, and EIS tax relief that's available in the UK is a significant driver in the early stage investment marketplace. Most of my experience has been with angel investing, and for those individuals, the majority will maintain that their first interest is seeing the company succeed. It's great to get the tax break, but their real motivation is, it's not that different from going down to Musselburgh and putting £10 on, I don't know, the favourite, or 10-1 or whatever. So there's an element of that, the excitement of seeing whether it will be successful, but obviously you want to be the person who's backed the winner. So there is a real personal interest in the opportunities. And a lot of the angel investors will only invest in companies that they, say in sectors that they worked in professionally, so areas that they feel they understand, and are more likely to spot the winners. So there's a real personal engagement on the whole. There are very few people, in my experience, who do angel investing who are only doing it for the tax break.
And is that something to do with Scotland, would you say, or Edinburgh's community, or wider field?
I think it's more the individuals who are angels, and you can read some of the a lot of American angels have written books about their experience, and for a lot of them they've made their fortunes in a whether it's PayPal or whatever, in a particular business sector, and it's some of them go back round and do it from the beginning again, but for a lot of them it's their way of still getting some of the excitement and less of the grief.
It's a bit like being a grandparent.
Exactly. That's a very good comparison. Yeah, I think so. I think there's an element of that, and I would say that is international. It's not unique to Scotland or the UK. Yeah.
Okay, great. So I know sometimes angel investors have a problem when VCs come on board, and they might have enabled a company to get going, early stages, providing that essential role, and then it doesn't work out so well for them 10 years later when the VCs have provided 3 or 4 rounds. So what can angels do to prevent that?
So there are a number of things that can be done, and it depends on the angel group. So I've said that each angel syndicate or individual is targeting a different kind of opportunity. So some of the angel groups invest very early stage, and I'm trying to describe Apollo here, okay? So these are businesses that will get to cash break even really quickly. So the idea is there's a minimal initial investment requirement, and the businesses will start selling almost immediately and very quickly be able to grow organically rather than requiring any additional equity investment. So that's one way, is making the right choice. So you arguably that the investment value will grow relatively slowly potentially, but you've invested at such an early stage that you have a significant part of that. So your multiple, you might be getting 3x, 4x, so it's 3 times a quite small number, but it's still a 3x. So you could do it that way. Archangels has a different model. They have a reasonable amount of firepower, so investment money within their network. When they make their initial investment in a company on the back of an envelope, because who knows, but they think this is probably how many rounds this business will need to get to a value inflection point that will drive a trade sale. We have enough money in our network to support the company over whatever it is, over the next 3 rounds, next 5-6 years. And we believe that at that stage we'll have a trade sale. So you kind of plan in not having to take VC investment. Okay?
So you want to build a unicorn through sales and revenue generation?
You're not building a unicorn. You're not building a unicorn. What you're doing is, and this is a decision that, say, Apollo has made. I don't think, I mean, I might be wrong, but there is a low expectation that investments in the Apollo portfolio will become unicorns. There's a low expectation that investments in the Archangels portfolio will become unicorns. But what there is, and they have the track record to prove it, is that there will be a successful trade sale that will give investors a 3x, 5x return on their investment within 7 or 8 years. Now, when you've had the tax breaks, you've had the excitement of backing a successful business, you've got a reasonable multiple on your money. It would be lovely to have a unicorn, but that's not the expectation. The expectation is to deliver that trade sale at a 3x, 5x multiple of investment. There aren't many unicorns around, and I think that it's almost impossible to achieve that sort of valuation, because the valuation inflation comes from the multiple rounds of investment. So if you're not having the multiple rounds of investment, you don't have the certificate to prove that you're a unicorn. Yeah? At that stage, there are, across the various angel groups in Scotland, I think in each portfolio there are probably maybe a couple of CEOs who are ambitious and fairly confident that they will outgrow their investor group. Now, that's something that's reasonably new, but it's happening now. And most of the angel groups are responding to that and engaging more. So with the change in the budget last year, VCTs have to invest in proper venture. So there's a lot more investment money chasing venture deals than there has been. And a number of the angel groups now, portfolio companies, are getting, the angel groups are co-investing alongside VCT funds and larger investors. Now, to make that work, the majority of those investors, because it's tax driven again, so that helps, are investing alongside the angels. So that's a very recent change in the market, but it is starting to happen. And I think it's more driven by the market, so the demand for good deals, than by any desirability to not to have preferences in the stack. So I think for a lot of the larger investors, that's their natural hunting ground. They would expect to annihilate the angel investors when they invest, but they're not seeing the deal flow. And in order to see the deal flow, they're starting to be, not all of them, but there is a move in that direction of being a bit more understanding about the angel contribution, and also a willingness to have the angels co-invest alongside them. So while they might bring in preferences of some description, if the angels can invest alongside the new investor, then they're getting those same terms, and that helps to mitigate any the inherent conflict.
Well, that's good. I hadn't heard about that actually, so that's very encouraging. So over the years, let's try and turn it the other way a little bit. So is there any patterns or mistakes that you see entrepreneurs making again and again?
We all make our own mistakes, really, and I think that one of the benefits of these sorts of conversations is hearing about other people's mistakes. I know the University of Edinburgh has introduced an evening of listening to mistakes as part of their entrepreneurial initiatives, because you know what, that's really important. So if we don't have people making mistakes, that's bad for education. Okay, so the making mistakes is actually part of the entrepreneurial journey, and then quite often you don't know until later on. I mean, you don't necessarily know you've made a mistake today, and in some ways today it might not be a mistake, and you only, because the world changes, talking about Brexit earlier, that you think, well, this is a brilliant idea, and then something incredible happens, like, well, we're leaving the EU, and oh dear, my input costs are now through the roof, and my the financial viability is shot. So there are lots of other reasons why things might not turn out, and I would say it's unfair to attribute the fault to the entrepreneurs, because very often it's a range of factors. And I guess what it comes down to, and why the making mistakes is important, is your experience and confidence as entrepreneurs, because you do learn from the mistakes, and then the next time you're in a better shape to manage. And a lot of it amazes me, some people who are kind of fresh out of school and they just know the right thing to do. I don't know, and that is there's a bit of debate about whether you can learn to be an entrepreneur or whether you're born an entrepreneur, but some people just are so commercially savvy from the beginning without necessarily learning from any mistakes, and then other people are perhaps not so gifted and do have to make the mistakes to learn. I think on the whole, you only make a mistake once. It's just that there are lots of other mistakes that you can make later on.
Okay, so you mentioned commercial savviness.
Mm-hmm.
And so this is something that an entrepreneur should be thinking about and assessing their own abilities in this space. And if they don't think that they're commercially savvy as they perhaps should be, what do you think they could do about that?
Well, this is all part of the establishing your founder group, and it is really important to understand what you're good at, what you can do. And I've probably worked more with IP-rich businesses. A lot of them are university spin-outs. So you have the academic who's developed the science behind the business opportunity. Now, obviously, they are the only person in the world who understands the science. So nobody else can sell this because nobody else understands it. And that's quite a common issue. So absolutely, you need to understand what your limitations are, and generally speaking, And there are some academics who make the transition to commercial success, but they're few and far between. And in fact, a lot of founders, while they are very well suited to the early stages of a business, are not suited to the growth stage when that comes along. So understanding yourself is really important, and making sure that you work with people. Well, we were talking about developing that the trust between the founders, between the business and the investors, but at the same time it's acknowledging, and most investors will do this, if they'll say to the founder CEO, for example, in 3 years' time you will not be CEO anymore. You realize that. And I think for a lot of founders, that's actually, they'll say, yes, yeah, if you give me the money, I'll say yes to anything. But genuinely, they have to listen to those sorts of statements. And ideally, they should be saying that themselves. They should have that level of understanding that means they know that 3 years of development gets the company to that stage, and then I need somebody else to take over.
And very often, the founder thrives on chaos and discovery and taking risks. And when they discover their formula or the business model that works for them, then scaling becomes very boring and repetitive,
that's right.
And they need a different mentality to do that, and the founder will just get bored with
possibly. Well, a lot of founders do get to that stage. I don't enjoy this. I'm not enjoying this anymore. So you see founders who take a company to a certain stage and then go off and start something else, take it to a similar stage, go off and start something else, take it to a similar stage. And then there are professional managers, and for a portfolio like the Archangel's portfolio, for example, one of the jobs for the portfolio managers is to identify the professional company directors who'll come in when the company's reached a certain stage. Right, we need to bring in professional management, and usually there's a reasonable alignment, because, as you've just described, the founder, I wondered what was wrong, why I didn't want to get up on Monday morning, but it's because this company that they've created has grown up. So you were talking about grandparenting. Well, this is like the teenager who is now leaving, going off to university. That's completely different. You need a different group of people to work with them from that stage.
Great. So one thing we didn't touch on before an entrepreneur can perhaps be ready to get investment, they can try and access grants from Scottish Enterprise. There's a number of other initiatives, Scottish Edge, and can you maybe just tell us, or any advice for entrepreneurs who want to try and access some grants?
Yeah. So grants are not just for early stage businesses. There are lots of large corporates that benefit from grant funding, and some grants are used by Scotland to attract international corporates to locate in Scotland. So grants are used throughout, and there's no shame in taking a grant. What you, especially as a small early stage business, what you have to be really careful of is that the strings attached to it are actually aligned with what you want to do. So it's very, very bad, both for you as a founder, and also for anybody doing diligence on you subsequently as a potential investor. If you've taken a grant, that means you have to go off there for the next 6 months or 12 months doing something completely different from your main focus just to get the grant. No, not great. So that's something to avoid. I think that one of the hugely beneficial areas of grant funding is when you're at that early stage, you've recognized the skills gaps in the team, and you've identified expertise that you would like to add, and very often there is partial funding for salaries for somebody like that. If you're bringing in expertise to the company, that's something that Scottish Enterprise as a development agency is really keen for you to do. and there may be 40% grant or something like that for salary. So that helps you to develop your company more quickly than perhaps you would otherwise be able to do. So really early on, and you're talking about, again, my experience is more through the university sector and the various competitions that there are in the university sector, including, say, Converge Challenge, but there are lots of other sources. So many of the banks have pitching competitions, and there's an opportunity to get small grants that can make a significant difference to an early stage business. But what you have to be careful of is that you're actually benefiting from the process. Because really what you should be doing is running your business. And if you find that your business has become turning up at pitching competitions, you've got a bit of an issue. So yes, you might be winning prizes or securing grants, but that's not how you're going to secure investment. You need to run your business as well. So you need to get the balance right. And I think one of the challenges for all of us, and we're talking earlier about an events calendar, but I think it's also quite difficult to track down the information about all the grants and competitions that are out there, potential sources of funding. And I think if somebody made that available more widely, then it would be easier for entrepreneurs to identify the competitions that are really worth going for, and the ones that are aligned with their direction of travel.
That sounds like a great idea. Okay, I think now it's time for some Q&A. So if anybody has any, but thank you, Mary Jane. Does anybody have any questions that they'd like to ask?
What's the best investment you've made, or maybe one that you also missed and you wish you invested in?
Yeah, so I have I've only personally, so my money, I only have one investment.
Oh,
okay, and it's at an interesting stage right now. But I'm very optimistic. You need to be. So I think that the thing that fascinates me is that a lot of people like me believe we know what's happening in Scotland. So we're working with angel investors, we go to all the events, we see the companies pitching and so on. But there are some, arguably the major achievements are actually not even in the sorts of companies that we're backing. Because you know what? There are some people who grow organically, get no external investment, and then they sell their business and all the money goes to them because they've not sold any equity along the line. And I think those are the ones that really impress me. One, that they've managed to do that, focusing on building a business without any nursemaiding from investors, nothing like that, and they have everything under their own steam. I think that's a huge achievement. And there are a number, you don't need to look very far, but there are a number of companies that have done that in Edinburgh and further afield in Scotland. So, yeah. Mm.
How would you recommend if approaching, say, either an archangel, an angel, or connecting with an investor who would actually be interested in your specific niche within a sector? Because there are people who are particularly interested in one thing. For instance, holistic wellness. That would be the area that I'm interested in. How would I guess it depends on the investor. If they have kind of a pet interest, or it's about the stage that you're at.
Yes.
But how would you go finding them?
So on that, I would say if you're operating in a particular niche, you'll be going to whether it's meetups or other events that are related to that niche. So there's that networking opportunity, and you build that over time. You might get lucky, and the first event you go to, there's somebody who fits the bill, but that's something you need to build on, and it's in your interest to be at that event anyway, and finding the investor would be a significant upside on the attendance, but it's worthwhile being there. One of the things, I was on the board of Link Scotland for 4 years, and Link Scotland is the umbrella organisation for angel investing in Scotland. Most of the angel groups are members. It's like a trade association. But the other thing that Link does, that's LINC, Link Scotland. The other thing that Link does, and I think you had Alan here recently
3 months ago, yeah.
talking about it, but one of the other things that they do is that they have individuals who are so angel investors, not members of syndicates. So you can go online and find the Apollo webpage or the Archangel webpage or whatever, and see what the process is, see what sorts of companies they invest in. Now these individuals are a hidden resource that you can access through Link. I don't know who they are, but there could be individuals in that network. They don't want to be in a group, they want to do their own thing, and you're more likely then, I would say, to find somebody who completely engages with a narrow, focused business opportunity, because maybe they've made their money in that way, or they're particularly interested, whatever it is, but then it's personal. And you might be lucky and get that alignment. Yeah.
Okay, great.
What sort of time scale does it take from the initial conversation with the investor and the process?
Yeah, I would say it's hugely varied. I've heard more and more people complaining about the length of time that it takes angel groups to make up their minds, and I think partly it's because there's a lot of competition to get in front of them, so you apply and you get selected, and then you get trained in pitching or whatever the requirement is. So all of that takes time, and from the point that you make contact, it could be that the first available slot is in 3 months' time because the next 2 are already full. So increasingly, I think that's happening. But from a personal point of view, and it was when I first started. I started working at Archangels on the 1st of September, and a company came through the door for the first time in September. So maybe the 10th, 12th of September. That was the first time we'd ever met them, and we completed the funding round in the middle of December. So it's possible
what's the
to.
big end of the scale then?
Well, in some ways, I would say if it's going to work, it will happen reasonably quickly, and because if it's taking time, it's because we were talking about this. Well, it's because there's something wrong. There's some uncertainty. It's because it's not a great fit, and arguably then. You end up being room meat or something like that, where you're just making up the numbers, there's no real serious interest, and I think unless you have to nurture the relationship and encourage the engagement, so you have to be proactive, but if you're not getting anything back, there's a limit to how much time you can carry on working on that relationship. I don't know, Michiel, do you want to say something from an Apollo perspective?
I think one important thing to remember is that the contact between first presenting to our members and actually completing the deal is due diligence process, and the due diligence process for a company in Apollo stage where there's not much to invest in asset-wise is the person itself. You can only do due diligence on a person over a period of time. So how fast do they apply? What kind of information do they feed back to the group? What do they achieve between presenting and the time you're talking? So I'm personally quite, once the company has presented, I give the results of the meeting, and if it's positive, I say okay, it's positive, but then it's up for the company to make sure that they keep on chasing us. And that's not so much because we try to play hard to get, it's more like if you're going after a business and you try to sell a product or a service to a company, you have to chase them in as well. And I already know if you're a good salesperson, if you got the stamina of nailing it down and the ability to answer the right questions. So technically we could do deals faster, but I would be reluctant to do it because it gives me time to see how the company is developing. And
So it takes from a positive response from the group, it's what, 3 months to investment maybe?
yeah, it depends a little bit if SAP becomes involved. We had one investment, we agreed, we presented in December, we agreed full terms in May, and took SAP till November to
Wow.
agree terms.
But that's bad.
Yeah.
That's maybe the other end of the
Yeah.
scale then. Yeah.
So it can go pretty quick. We had investments, we did appointed Leah,
Mhm.
and I think we invested within 3 weeks,
Yeah.
just because she gave off all the right signals.
So anything, I would say 2 months is probably the minimum. 2 months to a year. How about that? Yeah.
Okay, great. Any other questions inside the room, maybe?
Yeah, I have one.
Oh,
I just wanted to. Oh, sorry. Is there somebody else?
Go for it. Yeah.
you can go next, then Liza again.
Okay, yeah, just real quick. So, I just thought it'd be interesting to hear just briefly about the social investment Scotland.
Sis Ventures.
Yeah. So is it an
Yeah.
actual? Is it an NGO?
No.
Okay.
This is an EIS fund.
Right.
So, and it's something new for Social Investment
Right.
Scotland. It's an EIS fund,
Right.
so venture fund,
Got it.
and looking to it's impact investing.
Right.
Arguably, it's the same spread of businesses
Yeah.
that any of the angel groups are looking at.
Right.
And Sis Ventures will be co-investing alongside other investors.
Sure.
The important thing is that there is impact, and that could be, so it could be a dementia app. So there have been a couple of dementia app businesses in Scotland within the range of technology investments.
I just looked at it online, and
Yeah.
they have more people working for that fund than I've seen like venture capital firms have that have
Well,
$200 million capitalizations. So, what is their capitalization currently?
So the CIS is a business that's been around for 20 years, and most of the people you see there are employees of Social Investment Scotland.
Right.
They've had to be designated because of the sort of the FCA's approval structure. So they've been allocated, I don't know what percentage of their time. So yes, there is a complete team, but they're probably working 80% for the other business.
Okay.
Yeah. So it's perhaps slightly misleading.
Okay. It's just interesting. Thank you.
Okay, great. And so Liza, what was your other question?
It's fascinating to hear that the people who are the founders bring the company to a certain stage, and at that point, you know, maybe the role of CEO has outgrown them. Maybe they switch to being on the board or something like that. But what caught my ear is when you said that the investors then say, you know, we need somebody to step in, we need professional management from this, stage forward. Where are they going to source those people?
That's a massive challenge in Scotland at the moment, and it's something I think if you hear one wish, it's we wish we had more people to fulfill those sorts of roles. There are a number of people who are actively recruiting from elsewhere in the UK, elsewhere in the world. There are a number of the early stage businesses in Scotland that are making full use of the Home Office visa permit, approvals. So recruiting people internationally to come and work here. And a number of those people are then staying on. It's really difficult finding the right people, but in order to make investments work, you need to do that. Things are improving slightly in the sense that there've been a number of successful exits, and you find with each successful exit, people come back in. We talked a little bit about that, but the people have enjoyed getting to that successful outcome, and they want to get involved in another business because of their experience. They believe they can spot the right business that's going to work for them, and so they come back in. And a number of businesses I've seen now have, say, ex-Skyscanner people on the board, so there is a huge opportunity with the success of the sector to start leveraging the experience of the people who've had successful exits, and that's happening more and more. It's still a big issue though. Where do you find the professional, experienced people to continue building the shareholder value? That's a real challenge for Scotland.
That's an opportunity for some aspiring entrepreneur somewhere.
Yeah.
Related to that, think about having an option pool when you approach investors, set aside part of your shares for options for potential CEO or CTOs or whatever.
That's a good tip, thanks. So, Mike.
In your experience, is there a metric that you use to decide how early you can invest in a company? Like, for example, a SaaS company. At what point is it ready?
Yeah, a lot of this comes down to the nature of the investor, and there are some investors that want to be first in. They don't like it if somebody else has been involved, and because they feel it somehow tainted the business if somebody else has invested before them. So those folks have to invest pretty early to make sure that they get the opportunity. Otherwise, they wouldn't be doing much investing. Other investors rather are uncomfortable with a blank sheet. Sorry, it's not quite a blank sheet of paper. It's just the dream. And there, I think, whereas in the past, those sorts of opportunities were backed by angel groups, I think now the angel groups have moved slightly upscale, and the expectation is that there is support out there to get companies to a slightly later stage these days than was the case 20 years ago. So 20 years ago, likes of archangels would invest in an idea, literally. They'd invest in an idea, which is incredibly risky, but that's what they did. Nowadays, they wouldn't do that. They would want to have the IP in place. They would want to have some demonstration that the technology is workable. They'd want to have something a bit more tangible. Probably apart from going to Apollo, which does very early stage investing, also the folks in St Andrews, what are they called?
Yeah, but I think EOS is moving on.
EOS. When EOS set up, they were only doing first round investments, mainly in life sciences. But the expectation is that you'll exhaust your friends and family, get to a slightly more advanced stage where you have a company, not just an idea. And that's in your interest as well, because you lose less of the equity.
Just a little follow-up. So I get confused. I think the term early stage startup. For example, I looked up a early stage startup financial plan template, and the template had 18 employees on it.
Yeah.
To me, that's not a very early stage.
Yeah,
startup.
the vocabulary is abused somewhat, and it's the same with seed, early seed, late seed, Series A, Series B, and for some companies, we're Series A, and then another investor will look at them, oh, you're not, you're seed. So people use the words to mean what they want them to mean. I don't think there is an absolute measure at all. And early stage probably means pre-revenue. It might be better to pin it on that sort of description rather than early stage, which doesn't necessarily mean the same thing to everybody.
Can you maybe clarify what the motivation for a first-in investor? Is it to get a large percentage of the company, or is it they want to make a difference?
I think it's, well, one of the things is you get more of the business, definitely, but I think it's mainly driven by their belief in their ability to shape the opportunity. So they think if they get in at the beginning, they can work with the founder to make the company a success. And as the original investor, they have that opportunity, whereas if there's another investor in there already, they might disagree as to what it should look like. So the only way for the investor to stamp their identity on the investee company is to be in at the beginning. I think there's a bit of that. Yeah.
Okay, maybe one more question about Mel.
Yeah, just a question out of interest. I'm a trustee of Challenges Worldwide, so we're doing a lot of projects over in Africa, obviously working with organisations and impact. So what's actually involved with the African Lakes?
With African
project?
Lakes. Yeah. African Lakes is a small investment company. Half the investment pot is from the Scottish Government Overseas Development Budget, and that is matched by high net worths. So in some ways it's a little bit like the Scottish Investment Bank model with the co-investment fund. So it's private sector matched with public sector, and the focus is very much on investing in established businesses at a growth stage, so where equity investment can take the company to the next level. And the driver there is to move away from reliance on aid by delivering economic development. So again, the language is similar to the Scottish Enterprise. We're an economic development agency language that they use in Scotland, so on a much smaller scale, but similar drivers.
And is it kind of, again, sort of specific, or is it much more broader in the kind of economic niches that companies can be involved in? It's not limited by sector at all. It's the nature of the opportunity that's important. And I think we're focusing on Malawi, and Malawi is mainly an agricultural economy, so a lot of the opportunities I'm seeing are food related. That's just the stage that the country's at, and that's very different for me because I've never been involved in food investments in Scotland, so it's all fascinating. Yeah.
Okay, maybe one last question, if anybody, or we should just end there. Oh, one more.
Yeah, one more. What's the best place to start and get in touch with potential investors? Is it the Link website? Is it going to networking?
I would definitely go to the Link website, and that will give you a good overview of who's out there, because you need to know who's out there, who's worth speaking to, who you want to speak to, and then you can start working out which events make sense. Link also organises produces a monthly newsletter called Young Company Finance. I'm not sure, it used to be it was a subscription model, so I'm not sure how you access that, but Young Company Finance has all the deals that are being done in Scotland. Okay, so there you see both the target companies, what's going on, who's fundraising, who's doing what, who's starting, who's exiting, but also who's investing. So you get that information. You can see, oh, what's happened this month. This is really exciting read. So YCF is a good place to see what's going on. And from, depending on where you come from, Business Gateway, the Chamber of Commerce, the Federation of Small Businesses are all potential sources of networking events and introductions to investors. I don't know, there's not really anywhere to see all the investors in a room, is there?
No, EIE is probably the closest you get.
Yeah.
But the best event, I think, is the Gateway to Investment program run by Business Gateway Edinburgh. And Sterling has also started the program.
Yeah.
I think that's the best one.
Mm-hmm.
It's kind of a 5-day course that ends up with pitching to the different syndicates in this kind of trial. So you get legal advice, you get accounting advice. It's really good.
Yeah. So that's but there are other. We were talking about competitions earlier. So something like Scottish Edge, which also provides that sort of mentoring and support through that network as well.
Yeah, same with EIE.
Yes.
But I think the most complete program is Business Gateway.
Yeah. And they've been running that program for maybe 8 years or something like that. So it's well tested, and you should be able to find people who've been on the program and can tell you about it.
5 companies out of the Business Gateway.
Out of that program, yeah.
And the predecessor, Road to Investment.
Mm-hmm. Yeah.
Well, that's fantastic. Top tip, Gateway to Investment. Check it out. Okay, now it's time for us to move on to a different experience, and it's an opportunity to get up and pitch your business.
Should we clap first?
Yeah.